Hello, beautiful people. This is Freedom Fighter. Thank you for tuning into our channel, Goldilocks Global Banking News. Everybody knows that Goldilocks is the number one source for the RVGCR. People from around the world tune in to see what Goldilocks is sharing on the RVGCR. Don't miss your chance and get your latest updates every day. So like, share, and subscribe to this channel to get your daily podcast from the Goldilocks articles on the RVGCR. Brought to you by Freedom Fighter. Hello, hello, beautiful people. This is Freedom Fighter, and welcome to Goldilocks Global Banking News. I am your host, fine folks. Today, institutional involvement. The institutions, folks, that are involved with the global currency reset, Goldilocks is showing that they are moving in even more heavily now than before in buying up foreign currencies. Let's jump right into what Goldilocks is sharing today. Let's get straight to it. Institutional involvement. Folks, there's a difference between the institutions, the financial institutions. Let me be very specific. The financial institutions, which is the institutional involvement Goldilocks is referring to, as investors, they are totally different than what we would consider as investors. Meaning, for the average person within dinar land or the RV land that has currency, you're not an institution. You do not have licenses as a financial institution to trade, buy, and sell foreign currency in the trillions of dollars daily. Only institutions have that capability. For a while, they've been investing heavily in foreign currencies because many of our members have been reporting that they're getting that information from their financial institutions, their wealth managers, which are the financial institutions. But now there's a push even more so by them. Why are they pumping so much money into foreign currency? Goldilocks is sharing that particularly by central banks and large financial institutions, between the two of them, central banks and large financial institutions, they can significantly raise the value of foreign currencies. Bottom line, they can significantly raise the exchange rates of foreign currencies. How does that happen? It doesn't happen from, hey, we're just going to press a button and flip the switch. That is not reality. That's fairy tale. That's conjecture. That's hype. The way that they do this is through reforms, intervention by the central banks. At the same time, it's a coordinated effort with the IMF, the World Bank, the Bank of International Settlements, and the U.S. Treasury. But that coordination is not to coordinate a rate change, but to facilitate reforms within their own countries based on their own sovereignty. But then many countries also follow international guidelines and standards as well. That's where the IMF, World Bank, the Bank of International Settlements, and U.S. Treasury comes in. Through direct interventions by the central banks and institutional investors, like purchasing domestic currency with foreign reserves, they also adjust interest rates by using market influence. This is where Goldilocks always shown market access of Vietnam's economy. Market access, which is what Iraq is literally right now negotiating with the World Trade Organization. And by doing this, what's happening with these institutions, they can increase demand for a currency, which in return creates the environment for an increased rate of that currency. See, there is something called institutional money, which is including banks, hedge funds, and central banks as well. They operate in what's called an interbank market before and with far greater influence than a retail market or a retail bank. The institutional money, folks, they dictate price trends. Yes, price trends of currencies. The rates of currencies, they dictate, not by dictatorship, but by massive buying volume. They move the markets. And they act as a primary liquidity provider, meaning the money flow into foreign currency and into retail dealers or brokers, which are the exchange brokers that buy and sell foreign currency on the internet and all over the world. What Goldilocks is sharing is that there is a Forex market movement that is happening right now in 2026, influenced by broader structural shifts throughout the global markets, financial markets. While not a complete overhaul of decentralized, Forex is moving rapidly to the upside. Forex and the global financial markets are experiencing notable rotations, with money flowing from central banks and institutional investors. In this environment, Forex is transitioning toward a greater emphasis on growth and structural factors rather than pure inflation data. This is where it gets very interesting. Pay attention. A broadly steadier to weaker dollar could facilitate capital movement into currencies that are backed by commodities. Emerging market currencies may gain more support as investors flock heavily to the emerging market currencies right now. Which this is what Goldilocks has been sharing for several months. That institutional investors have been pumping a lot of money into emerging market currencies. Do you know if the currency you hold is an emerging market currency or not? I know. Some people just won't even care. But if you have an idea, you can be prepared for what is coming. Goldilocks is sharing is that though the core decentralized structure of Forex has massive daily liquidity across all sectors, traders and investors increasingly are monitoring everything because of the flows of money pumping into Forex right now. Think of it as a signal. And these institutional investors, they saw the signal years in advance. What Goldilocks is sharing is that, yes, this absolutely means that traders are intensively monitoring currency rate movements. They are intently following this. And they're not waiting for news, they are creating the news. Institutional involvement drives record Forex activity for this year. And that is from the Bank of International Settlements. Remember, there are four agencies that oversee the revaluation of currencies and currencies all over the world: the Bank of International Settlements, the IMF, the World Bank, and the U.S. Treasury. And this is the Bank of International Settlements saying this. Actually, and this is an article that Goldilocks is sharing from the BIS, the Bank of International Settlements, stating institutional investors have become a dominant force in the purchase of foreign currency exchange markets, with asset managers, hedge funds, pension funds, and central banks contributing to the surge in the volume. Asset managers, folks, that's the institutional investors. That's the firms that many of our members have already secured their relationships with. That is why those firms are advising their clients to prepare for the opportunities in emerging market currencies. According to the Bank of International Settlements, even the over the counter, which is more of your institutional trading of foreign currency, reached $9.6 trillion per day in April of last year. 9.6 trillion in Forex traded per day. That was just in certain parts of Forex, not total. The Bank of International Settlements highlights expanding participation by these institutional players, the asset managers, hedge funds, pension funds. These are the institutions that move the markets. These are the institutions that know what's going to happen in the market before it happens, because they move the market in their favor. What Goldilocks is sharing is that this has intensified the pressure on foreign currency exchange rates, particularly in emerging markets. Platforms and clearing systems reported sustained and elevated activity, underscoring the resilience of Forex markets driven by institutional money and professional capital. See, when it comes to finance, in the finance world, you need to follow the money. That's not just in the finance world. Shoot, that's in anything. Follow the money, not narratives, not the echo chambers. Follow the money. This is where you're able to understand what you've invested in and how to prepare for it. Because everything is public. The banking industry is a regulated industry. Goldilocks shares exactly what's from the sources provided in the public. Forex, the institutional big money players, the Bank of International Settlements, one of the four major agencies involved with foreign currencies to move the markets, is telling the public where the money is moving. So get prepared and ready. We love you, folks.
Hello, beautiful people. This is Freedom Fighter. Thank you for tuning into our channel, Goldilocks Global Banking News. Everybody knows that Goldilocks is the #1 source for the RVGCR. People from around the world tune in to see what Goldilocks is sharing on the RVGCR. Don't miss your chance and get your latest updates every day. So like, share, and subscribe to this channel to get your daily podcast from the Goldilocks articles on the RVGCR. Brought to you by Freedom Fighter.